Good morning, everybody, and welcome back. I hope you have a good week for all of you. Today, we want to discuss gold market and crude oil, U.S. oil. We will start with the gold chart. This is for our time frames, as we know and have shown you in the previous videos. Gold is moving in the bearish trend since long couple of months, and it is correcting now to the upper side, and we have a count that will drag the price and push the price to the lower to low prices, uh, as a continuation pattern. As we see from this chart, we have a triangle. The whole price is contracting within a triangle, and as an Elliott count for this triangle, it should have 5 waves, starting from this bottom, wave A, wave B, wave C, wave D, and we are in wave E. And of course, as you know, wave E could be overshot or undershot, in and outside of the triangle. So our next anticipated movement should be to the down, targeting for 1,124 dollar per ounce. The confirmation of this count will come after price coming out of the triangle. If you are not selling from high prices, you can wait and for the price to get out of the triangle and join the seller targeting to the downside. I will remove the drawings and show you different thing. We have a possibility that the whole movement of the gold is still correcting to the upside. I will show you that. Okay. We can count the first leg as A, and the price is now correcting in the form of ABC to the downside, and we might see another leg to the upside, targeting to 1,224 to 28 1,124 to 28. This is A. This is the whole B, complex B, in the form of W, X, Y. Doesn't matter. Okay, the confirmation of discount will come once we break above 1,214. We could not take any long position before this number. If we break 1,214, we can join buyers to a couple of dollars, and I advise you to take small position for the buyers, and you can't sell because you are trading against the trend in favor of the sellers. So once you take a short-term long position, you can take a small position and be very careful. That's all about gold. Let's move to US oil. Okay, as we see from you for our time chart of the US, we have two conflict we have a conflict between the classical patterns and the Elliott counts. Uh, Elliott, we will start with Elliott counts. Elliott counts telling that the price has moved into the upside in the form of impulse, the first impulse, uh, the second corrective impulse, then in the form of ABC. So we anticipate the price to go to this around this level before it continue to the upside. I will show you in details about discount. We'll go to 1 hour time frame. Okay. Okay. I'll zoom in. Okay. We will talk about this piece of correction for the market. The first leg to the downside, the first leg to the downside in the form of impulse. Then we have a correction to the upside. Then we have correction to the upside. So the price, this is A, this is B, and we have to see the price coming back and breaking back to this level around 67 area, around 67 area. That conflict I talked about in the beginning between the Elliott counts and the classical is like this. Elliott count showing the price bearish patterns, showing bearish patterns, but we have reversal head and shoulder as you see from this okay, this is the left shoulder, this is the head, and this is the right shoulder, and the target for this is around 78 20 78 20. Okay. Of course, we have different some differences between the charts between the brokers. If we change the broker and if we change the broker, you can notice, okay, both of them we have broken the neckline for the head and shoulder, so the price should go to 7 point. But according to Elliott count, price is still having a missing link to the downside. We still having a missing link to the downside to this level, and of course the reversal pattern head and shoulder is still viable. If we have a price moving to this area again, this will not eliminate the probability of the classical patterns. That's all about crude oil. Hope you have a very profitable week for all of you.